Hello everyone. Good morning, good afternoon, good evening, depending upon when you are listening to this audio lecture. In the series of understanding some of the basic concepts and definitions in relation to the Income Tax Act, in the previous classes we discussed about some concepts and some definitions. Of course, we need to also keep in mind the distinction between concepts and definitions also. Definitions are in accordance with Income Tax Act 1961. Concepts are not defined in the law. That is what is the understanding of the law. For example, when we have understood the meaning of the terms tax, duty or cess, those were not definitions. Those were concepts and we need to know them before even jumping into the definitions part, before even looking at the Income Tax Act. So, tax, duty, cess terminology is a concept. Though it is more particularly applicable to only India, it is a concept. What is direct taxes and what is indirect tax is a concept. Nobody will define that. So that is also a concept. Same way, the difference between association of persons and body of individuals, as we discussed in one of the other sessions, is only a concept. It is not clearly defined in the law. As the names indicates, as the general practice that we observe in the real world, we understand, okay, this is what association of persons mean, AOP. Or this is what body of individuals mean, that is BOI. AOP can have anybody as a member, including but not limited to individuals, whereas BOI will have only individuals as members. That distinction is not created by law. That is the understanding part. So we can call that also a conceptual understanding rather than a definition. But we have not just limited our discussion to concepts. We have touched upon many of the definitions under Income Tax Act as well. For example, when we have understood what is previous year and what is assessment year, yes, the definition of previous year assessment year was given in the Income Tax Act. So, from that definition, we understood what it means. So, the definitions may have as a part of them the concept related to the word that is being defined. That does not mean the opposite. A concept, on the other hand, is only a general understanding. So, put it this way, definition is what the law says, concept is what we understand. Of course, naturally the definitions will include what we understand also, but the concept of tax, duty, cess, for that matter, what is direct tax, what is indirect tax, no law is going to define them. These are only general understanding that is required before trying to learn the subject of law, the subject of income tax, to be very specific. Like this, we have understood the definitions of previous year and assessment year, and also very important provisions related to exceptions to the general rule that incomes of previous year are subjected to tax in assessment year, and all those 5 exceptions, very important theory question we discussed earlier, that is part of the Income Tax Act. And what are the special cases where the previous year can be less than 12 months, but assessment year can never be less than 12 months is also another thing that we discussed. And definitions, once again, of SASI, definition of SASI in accordance with Income Tax Act we discussed, and definition of person in accordance with Income Tax Act we discussed about it, and how the Income Tax Act classifies various companies also we discussed about it, like domestic company and foreign company, and how the Act has defined foreign company. Any company which is not a domestic company is a foreign company. Then what is a domestic company? Every Indian company plus any other company which has made arrangements to pay dividends in India out of the incomes earned in India. So these are all legal things defined in the Act. SSC is defined in the Act. Person is defined in the Act. What is a company? What is an Indian company? What is a domestic company? What is a foreign company? Defined in the Act. What is a firm? Defined in the Act. And according to the Income Tax Act, firm includes the partnership firm as defined in Indian Partnership Act 1932 plus any limited liability partnership as defined in Limited Liability Partnership Act 2008. So these are all various definitions in the Income Tax Act. And for normal understandable purposes, Income Tax Act does not define particularly who is an individual. That is to be understood. Individual is anybody who is a human being. And HUF is also not defined particularly in the Income Tax Act. Reason being, HUF is not a legal structure. It is a social structure which has been there in the history of India as a family. So, HUF is not a legal entity normally. It is not a separate legal entity under normal circumstances. It is not created by law, to be very specific. It is not created by law. HUF is created by custom, means the tradition of this country. However, HUF is still treated as a separate person for the purpose of Income Tax Act, which means if HUF has any income, it can be assessed for that income separately from its members. So each of the members will be assessed separately as individuals. At the same time, HUF will be assessed separately as HUF itself, because HUF is a person by itself and it is also possibly an SASI if it has any taxable income. So that is what HUF means. And a question comes here, which is a natural question and a good question also. Sir, if HUF is already a person, HUF is already an SSE, and HUF is earning income and it is already taxed, means HUF as an SSE already completed its assessment and paid tax on that to the government. After that, the members of the HUF have received their shares because they are all part of the HUF. Whatever the general tradition of that family is, the members of the HUF have received some money from the HUF as their shares in the common income of the HUF. Then, will that income be taxable once again in the hands of the members is a question generally that arises. Logic says, common sense says, it should not be taxable. Why? Because that income is already taxed in the hands of HUF. The same income ideally cannot be taxed twice or more. Ideally is the question. But if the law says so, it has to be taxed. But the law does not say the member's share is taxable. The member's share is not taxable since it is exempt from tax in accordance with the Income Tax Act Section 10. And why is that? Income Tax Act, why is it exempting the share of income of a member of the HUF? Simple logic. Since already HUF is a person, already HUF is an SSE, the income of HUF has already been assessed separately and HUF has paid tax on its income. So it is already an income on which the tax has been paid. On the same income, just because they received a share of it, that should not be taxed once again. That is against the principles of natural justice. That is why the income of the members, share of profit of the members who have received their share from the HUF is exempt from tax. It is not taxable. If you apply the same analogy to a partnership firm, same logic applies. Imagine if there are partners who are receiving their share of profit from the partnership firm. Now we know partnership firm is a separate person. So partnership firm is a separate person. The individuals who are called as partners are separate persons. So the partnership firm is an SSE on its own. The individuals are all separate persons. If they are SSEs or not, that depends upon their income. But now the partnership firm as such, as an organization, is an SSE. It is a person and it has earned some income. It is supposed to pay tax, it has paid the tax. After the tax is paid also, naturally there will be profit, because out of the profit that is earned by the firm, a percentage only will be paid as tax. And there is a profit after tax has been already paid by the firm. And what happens to that profit? That profit will be shared by the partners. Now each of the partners got their share of profit from the partnership firm. Question arises, same. Is that share of profit received by the partners from the partnership firm taxable in the hands of partners? Question is same. Answer is also same. It is also exempt from tax. Reason, Also same. Why, sir? Why is it not taxable in the hands of partners? Because the same income has already been taxed in the hands of partnership firm. Since partnership firm is a separate SSE, it has already paid the tax as a firm. Now, the same income, which is a taxed income, after tax, such share of profit received by the partners shall not be taxable in the hands of partners. Same way, share of profit received by a member of HUF from the HUF shall not be taxable also. So that is the implication of having HUF as a separate person, partnership firm as a separate person. Now, naturally, some other questions will arise. Sir, should we apply the same logic to companies also? Boss, it is not our whims and fancies once again. The law has to tell that. The law has specifically exempted the share of profit received by a member from HUF, so it is not taxable. The law has specifically exempted the share of profit received by a partner from the partnership firm, so it is exempted. The law never told anything about company. Means what? Any dividend that is received by a shareholder from the company cannot have the same logic that we have applied for HUF or partnership firm. That is another important point to always keep in mind while learning the subject of income tax. Once again, if there is a provision, that provision is only applicable in that context. It is not our choice. It is not our whims and fancies. I will apply the logic of the provision elsewhere also. No. Logic is only required for understanding the provision, not giving us any choice of applying the same logic wherever we want to apply. That will not work. So where the logic is applying now, same income cannot be taxed twice. That logic is applied by the law in two cases. One, share of profit by a member from the HUF. Two, share of profit by a partner from the partnership firm. Where is it not applicable? Company. So, in case of a company, the same logic cannot be applied. Then what about company? That we will come to it. That is a different story. At this time, all that we need to know is, we cannot jump to conclusions on the basis of what we know. That is where our imagination has to stop. More we imagine, more we try to implement the things which are not actually applicable in that circumstance. So until and unless we completely know the entire Income Tax Act, we cannot jump to conclusions. To whatever extent we know, to that extent only we have to limit our thought process. Is a very important aspect in the process of learning this act. Now we know who is a person. Now we know all the list of people who can be called as person. Now we know only a person can be called as an SSE. If somebody is not a person, he cannot be called as an SSE. However, already we know that also there is no way that anybody can escape from the definition of person. Why is that? The definition itself is quite exhaustive and almost it has included everything, every kind of organization structure that is possible on the earth, and to be particular in India. So nobody can escape the definition of person for sure. So naturally, if there is any tax payable by that person, automatically that person becomes an SSE. There is no option. That is how the definitions will be drafted, and that is how the definitions are included in the Income Tax Act 1961. So we understood the definition of SSE, definition of person, what is a firm, and what are the different types of companies in accordance with Income Tax Act. These are what definitions part we required and we dealt with them. As there are some more definitions also. What is an assessment? We don't need a big discussion on that. Assessment is a process of assessing the income of the SSE. That's all. For that we don't need income tax to tell us. So that is why those small things we did not focus much. But those words are important. Who is an SSE when we know what is an assessment? Name itself indicates. We can define it. Income Tax Act is not required for that. Of course, the definition is also same as per Income Tax Act. What is assessment? It is the process of assessing the income of the SSE. That is what is assessment. And now we know the process of assessment already. We may not know the definition, but we know the process of assessment already. What is that? That big list of step by step, one by one flow chart, which we discussed earlier. What is the process of assessment? Starting from determination of residential status, then computing the income in relation to 5 heads of incomes: salaries, income from house property, profits and gains of business or profession, capital gains, and income from other sources. After that, applying the provisions of clubbing of income, if any applicable, which means income of other persons included in the income of the SSE. Those are called clubbing provisions. If applicable, they have to be applied. Applying the provisions of set off and carry forward of losses. If there are losses, can they be adjusted with the profits of the SSE or not? There are provisions related to that. That is called set off. If there are losses of the current year, can we carry forward them and set off against the profits of the next years? There are provisions related to that. Those are all contained in the chapter of set off and carry forward of losses related to the SSEs. Of course, that will be applicable only if there are losses. If there are no losses, there is no need of any set off. So that if applicable, set off, carry forward, if applicable, clubbing have to be applied. These provisions have to be applied. After applying all these, aggregating all the income, what we get is called as gross total income. From that, we need to deduct section 80 deductions, popularly called as chapter 6a deductions. After giving those deductions, whatever the resultant we get is called as total income. That is the taxable income. Computing this taxable income itself is assessment. So having a step-by-step process, what we do, if we just put it on practice by implementing this on a particular SSE according to the data given by that SSE, that is what is assessment. So assessment is nothing but a process of assessing the income of the SSE. So that is what is assessment. So simply like these definitions are also there. So we know the definitions of all this. But again, we don't need a definition of individual. We don't need a definition of HUF specifically, not required. AOP, BOI, not required to be defined. But we should understand the concept of that. Who is an individual? What is a HUF? What is AOP? What is BOI? What is a local authority? Local authority is a person according to the Income Tax Act. Local authorities include municipalities, panchayats, and municipal corporations, cantonment boards. All of them are part of local authority definition, and those are also called as persons. From that, can we say they have to pay tax? That is where I am asking you to control your imaginations. No. Local authority is a person. That does not make them automatically an SSE. Even though they become SSE, that does not make them automatically liable to pay tax. All these things are different from each other. Whether local authority is a person or not, answer is yes. Whether local authority is an SSE, we don't know. On what basis it will depend. Every person need not be an SSE, because SSE definition contains somebody who has a taxable income, who has a liability to pay tax to the government or any other sum of money. According to the Income Tax Act, that person only is called as an SSE. On the other hand, somebody against whom any proceeding has been initiated, he can be called as an SSE. Or somebody who is deemed to be an SSE can be an SSE. Or somebody who is an SSE in default can be called as an SSE. If the local authority falls in any one of these categories, then only it will become an SSE. Just because it is a person, it will not become an SSE. There is no necessity that every person becomes an SSE. On the contrary, every SSE should be basically a person, because every sentence in the definition of SSE starts with the word person, person, person. That is the important aspect we need to understand. The link between the words SSE and person. Once again, I hope you understood this important sentence. Every SSE must be a person. Without being a person, somebody cannot become an SSE. That is first part. Second part, that does not mean every person is an SSE. So every SSE must be a person, but every person need not be an SSE. That is the link between those two words. Very important aspect to understand. The contradictions which are started just now in the Income Tax Act. So that we understood hopefully in the earlier class. And the definitions part of the person, including firm, company and all, we did that. Domestic company, foreign company, what is Indian company and all that. So details of Indian company we didn't go through that, not required, so we just ignored it. It is there in the ICA material, you can just go through that. There is nothing special about it. Indian company is that which is registered in India in accordance with an act which is Companies Act 2013, which is now existing, or in accordance with any other act that is prevailing prior to 2013. So it means what? Any company which is registered in India is automatically an Indian company. So that does not require a huge explanation. So you can just generally go through that if you are interested in the ICA material. So these are all persons, part of the persons, local authority and any other artificial juridical person. All of them are part of the definition of person. So assessment year, previous year is one aspect. What is assessment year, what is previous year, and what are the exceptions? Definition of SASI and person is another aspect. So these are the things that we already discussed, and hopefully everybody is very thorough with the understanding. At the same time, you have to remember certain things also if theory questions are asked from this chapter. So this chapter now we should have understood includes both definitions as well as concepts. Concepts are there for understanding purposes. Definitions are there for understanding plus reproduction purposes in the examination if they are asked. Same way, in addition to the definitions of all the SSE, person and different types of person, very important definition in relation to the country where this Income Tax Act is applicable, that is India definition, is also very important. This was asked in the earlier examinations also. Whenever I said definitions are asked, these are all 2 marks questions, small theory questions which have been popularly asked many a time. So definition of SSE, definition of person, definition of India, definition of assessment year, previous year and exceptions to that rule. What are the components of income tax law in India? All these are popular theory questions, not just for discussion. These are examination questions. Yes, they are important for understanding. Yes, they are important for future reference also while learning the income tax law. But it is not only limited to that. Even from examination point of view, these concepts and definitions have been tested lots of times. So be very thorough with these definitions also. If they are asked in the examinations, you should be able to write the same thing which has been defined in the law. Please don't create definitions. Please don't have any kind of new wording or explanation as far as definitions are concerned. If it is a concept, you can explain in our own words, no problem. If it is a definition, we cannot do that because definition is as per law. So we have to write whatever is actually written in the Income Tax Act 1961. Hence, definition of India also has to be written exactly in the same way it has been defined in section 225A of the Income Tax Act. And what was that? India includes the territory of India as per Article 1 of the Constitution, but it will not stop there. It will include the territorial waters also, and not only that, the seabed and subsoil underlying such territorial waters also, and it will include continental shelf and exclusive economic zone also, and any other specified maritime zone, and not only that, the airspace above its territory and territorial waters. So its territory means India's territory. Above the landmass and above the territorial waters also, the airspace is called as part of India. So the landmass of India, airspace above the landmass of India, territorial waters which extend up to 12 nautical miles from the coast of India, and territorial waters are part of India. Airspace above the territorial waters is also India, and subsoil below the territorial waters also is India, and continental shelf and exclusive economic zone is India. If you observe, airspace and subsoil in relation to continental shelf and exclusive economic zone is not part of India. Only continental shelf and exclusive economic zone is part of India, which extends up to 200 nautical miles from the coast of India. Whereas territory and territorial waters are absolutely part of India, whether it is ground, water, air, below the water, all these things are covered in the definition of India. That is what the definition of India is about as per section 225A. And just for understanding purposes, what is this exclusive economic zone, continental shelf, and what is territorial waters? First of all these three terms are related to the sea, not the land. And territorial waters extend up to 12 nautical miles from the coastline of India. Means what? Not only for the purpose of Income Tax Act, of course it is part of India. Even practically also, if somebody enters into the territorial waters without permission from Indian authorities, India has a right to almost arrest them. If they don't stop their boat or ship, the Coast Guard of India even has a right to shoot them down. That much power we will have naturally on our territorial waters, because somebody entering into our territorial waters is as good as entering into India, and that should happen only with permission, with proper documentation. But Continental Shelf Exclusive Economic Zone is not that. Exclusive Economic Zone is the area where somebody cannot come and use it for economic activity. No. Some other country cannot be in our exclusive economic zone and do some, let us say, petroleum exploration and excavation and taking the petroleum out of our exclusive economic zone. They cannot do. That is not permissible. However, can the ships be passed in the exclusive economic zone? Absolutely yes. Can we shoot them down? Absolutely no. It is not our territory. It is beyond our territory, but still it is our economic zone. So there is a difference between territory and economic zone. So simply speaking, territory extends up to how much distance? Only 12 nautical miles. Economic zone extends up to how much distance? Up to 200 nautical miles from the coast, from the sea line, from the land mass of the country. That is where these two words, territorial waters and exclusive economic zone, will become important. So exclusive economic zone is something which is not in general part of India in general. However, for the purpose of Income Tax Act, it also has been included in the definition of India. So territory, territorial waters, exclusive economic zone, all of them are part of India. That is what definition of India is all about. Now, there is one more particular special point we need to also have an idea about. Though it is very difficult every time to have this classification and particularly really going through them. But just like we discussed some of the terms earlier, now we need to discuss some more terms. For example, we discussed the distinction between tax, duty, cess and all that. If you say that how does it make a difference, end of the day it's all people paying money to government, then there is no discussion on that. Why? Because yes, true, all of them are monies payable by people to government. But as people, as students of a professional course learning the Income Tax Act in its real sense, we should know the distinction between them. Same way, we should know the distinction between what is a section, what is a subsection and what is a clause. That also we should know. Though, once again I am repeating, though we use it in a different context. For example, I just used section 2 subsection 25A or section 2 subsection 2 or section 2 subsection 19, something like that. I will just use it very commonly. Technically is it correct? Answer is no. No, that is not a subsection. Actually it is clause. So particularly if at all technically to be correct, can I call it section 2 subsection 25A? Answer is no. I should call it section 2 clause 25A. Like that I should call it. But point is, while dealing with the subject, while learning it, we don't give that much of focus onto these technicalities. However, should we know the difference? Answer is absolutely yes. We should know the difference. We should not ignore the difference between a subsection and a clause. Let us understand that part also today. What is the difference between a section, subsection and a clause and subclause? These are all various aspects of understanding any law for that matter. Not only Indian laws, any other country also similar nomenclature will be there. In Indian legislation, in the Indian statutes, this understanding will be applicable elsewhere also. Now, what is the section number that we know? Usually, that is the number which is stated in the Act as a sequential number, generally starting from section 1 in India, we are talking, which starts with short title and commencement. What is the name of the Act? And from when that Act is applicable, And where is that act applicable in India? Earlier there used to be some of the acts earlier, at least, which used to say it is applicable to whole of India except the state of Jammu and Kashmir. Now that facility is also not there since Article 370 has been abrogated. So what is the applicability? Entire India, all the acts are applicable. So that is section 1 in every law, not only Income Tax Act. Most of the acts in India start with section 1, which will have the title of the act and commencement of the act and applicability of the act. Where is it applicable? So title is the name, commencement is the date on which the law is applicable from. For example, Indian Income Tax Act 1961 is applicable from 1st April 1962. That is the date of commencement. Where is it applicable? Even before 370 abrogation, Income Tax Act was applicable throughout India, including the state of Jammu and Kashmir. So now Indian Income Tax Act is applicable throughout India. And what is India? We know already, as defined by section 2, clause 25A. So section is 1, section 2, section 10, like that we say. Section 80, we know them already just by names. So section 1 is about short title and commencement. Section 2 is about definitions. That is the main thing. Section 10, for example, is exemptions. Section 80, for example, is deductions. So these are section numbers. Now, within a section number, after the section number, there is another number that is written. Like for example, in this case of definition of India, we have section 225A. So now the question comes, what is that 25A? Is it a clause or subsection? How to distinguish that? Again, usage wise, we don't distinguish that. We just so lethargically use both very synonymously, subsection, clause and all. We use them synonymously, usage wise. However, technically they are not same. What is the difference? A clause is that one where the number of one clause and another clause has no relationship. For example, when we have the definitions which are given in the Income Tax Act, we have the definitions of SASI, we have the definition of person, we have the definition of assessment year and previous year. All these things are there already as defined in the Income Tax Act. We have the definitions. For example, section 2(9) defines the word assessment year. Section 3 defines the word previous year. Section 3 doesn't have any subsection or clause number. So section 2(9) defines assessment year. Right? So section 2(9) is one section with a clause number, that is 9. Same as SSC is defined in section 2 clause 7. So 2(7) we say, 2(9) we say. 2(7) defines the word SSC, 2(9) defines the word assessment year. Now what are these 7 and 9? Are they subsections or clauses? They are clauses. Why? Because the definition of SSC has nothing to do with definition of assessment year. So the contents of the definition of section 2(7) are completely different from the contents of section 2(9). Same with the contents of section 225A as defined as India. So the point is, when there is a section which contains many of the smaller parts, each of the parts is unrelated with each other. For example, section 2. Same for example, section 10, section 80. All these sections will have clauses. They will have clauses. Section 10(1) is about agricultural income. It has nothing to do with section 1034. It has nothing to do with section 1010. All those things are different from section 10(1). So each of the sub-points within the section are not related with each other. That is what we call as clause. So all there are section 2, the sub-points which are within section 2 should be ideally called as clauses. Same with section 10. All the sub-points within section 10 related to exemptions should also be ideally called as clauses. Same with section 80, which will contain deductions. All the sub-points within section 80 should be ideally called as clauses. That is what clauses mean. Technically, that is the difference. Then what is a subsection? Subsection is the one which is a continuation of the section itself. So one section is there which has told something, some provision is told, but while explaining that, content is related to the same, but multiple points are given within that, in that case, we can call that as subsection. So, when the subpoints within a section are unrelated, we call those subpoints as clauses. When the subpoints within a section are related with each other, all of them are talking about the same provision, then we call them the subpoints as subsection. So subsection and clause are not same. There is a subtle difference between them. Again, I am warning you, though there is a difference like this, we are not going to distinguish them while we use them. Always we are going to just use the word subsection, subsection. Every time nobody is going to tell subsection this, clause that, blah, 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 all this nobody is going to do. Though we use it very colloquially, very commonly, casually, interchangeably, we should know the distinction between them is the point. We know the distinction, but we are not applying the distinction in usage. In examination, nobody is going to ask you whether it is a subsection or a clause. If you write 2 in the bracket 7, that's it. What is there in the bracket? Is it a subsection or is it a clause? That nobody is going to ask you. But we should know. Section 2 in the bracket 7 is talking about a clause. Why? Because these clauses which are within section 2 are not related with each other. In the other case, wherever there is a section having some subpoints explaining the same thing, then we call those things as subsections. This technical difference should be there, and I am going to use this once for all. In future, we are not going to distinguish between subsections and clauses while we use them. While the word of clause or subsection is used, we use them very interchangeably. However, that does not mean they are same, they are different. We know them, still we don't care that difference while we use them. So, very normally, very casually it so comes section 2 subsection 7, section 2 subsection 25a. Like that it will come. That is how we try to remember things, or that is how we discuss the things verbally. On the contrary, technically is it correct? Answer is no. All these section 2, the subpoints within section 2 are not subsections, they are clauses. Same with section 10, same with section 80 also. Like that many cases where there are clauses but not subsections. Now that the topic has come, we should also know some of the other legal things in relation to various aspects of the Income Tax Act. What is the point which is mentioned in a particular section with a subsection or a clause, as the case may be is called? It is called a provision. For example, SASI defined in section 2(7). It's a provision of the law. What is that provision? It is defining somebody as an SASI. That is a provision, what we call. There is another word that is used, we will use it many a time in future, proviso. N is missing. Provision with an N. Proviso is without an N. So N is missing in proviso. What is a proviso? Proviso is an exception. Provision is something that is mentioned in the law, that is mentioned in the section. Below that section itself, sometimes we will see a proviso. That proviso means what? It is an exception to the above. So there can be a provision and an exception. Provision and an exception. There can be. Not necessarily every provision will have a proviso. If there is a proviso, what is it telling that we should know? It is telling an exception to the provision which has been mentioned above. So like that, the words provision and proviso also have to be very clearly understood. Provision is the main aspect or the thing that particular section is willing us to tell. Whatever it is telling us, that is provision. And exception to what it is telling us is proviso. That is also part of it. That is also continuation of the provision only. Don't think it is out of the income tax law. That is also part of the act. But provision is main. Proviso is in addition to the provision as an exception to the general rule, whatever has been mentioned above in the provision. So these words we are talking about, terminology. Yes, one way we can say, provision normally what it says, if at all, for understanding purposes. Provision says, the law says, act says, income of previous year shall be assessed to tax in assessment year. If you call that a provision, then what is a proviso telling us? Those are the exceptions, 5 exceptions that we have. All the 5 exceptions can be called as what? Not provisions. They are called as provisos. Proviso is nothing but exception. Sometimes for a definition, for a provision, there could be not just exceptions. We call them provisos. In addition to that, there could be explanations. Sometimes. Why explanations are required? Because sometimes the provision may be a little vague it may not be really clear. Under those circumstances, the law itself will give us some explanation to the provision, which also is part of the provision, and that will be in addition to the provision. So we have provision which is indicated by a section with either a clause or a subsection, and after the provision is mentioned in the section, whatever that section may be, there could be, not necessarily, but there could be a proviso to that particular provision, or there could be an explanation to that provision. Explanation will give additional points to the provision, whereas proviso will give exceptions to the provision. So we have a provision, proviso, exceptions. This is how explanation. So provision, proviso, explanation. This is how the structure of any particular provision can be. Maximum we are talking, biggest possible. Normally, every provision will not have provisos. Every provision will not have explanations. If there are any, then we have to understand explanation and proviso are also part of the provision. They are continuation of that only. Only point is explanations are enhancing whatever is already the provision is telling, whereas proviso is restricting whatever the provision is telling. It is going opposite direction of the provision. That is why we call the proviso as an exception to the provision. These are the legal terms that we should understand before going through some of the key aspects, key provisions of the Income Tax Act in future. So with this, on a broader note, we should have understood by now some of the aspects we learned so far are conceptual, some of the aspects we learned are legal and which are part of the act already. So that is why on a broader basis we can call this both concepts as well as definition. So concepts are different, definitions are different. Concepts are for understanding purposes, definitions are as per the law, as per the Income Tax Act 1961. That is about one of the major aspects in relation to the first topic that we are going through. Now moving on to the next point, you can open the image related to the concept or features of income. Here we have two choices. There is one definition of income also. We can go through that, or we can just ignore that for now and directly go to the concept of income rather than definition of income. And obviously I suggest the second thing. Why is that? If you go to the concept of income, it will be like Greek and Latin now. Why? Because that is what we are going to learn in the Income Tax Act, no? So the definition of income, whatever is defined in the Income Tax Act, that definition will contain everything that we are going to learn in future. It will contain many points which we are going to touch in multiple heads of incomes. All the five heads of incomes, whatever the items are going to be called as incomes in future, what are all going to be taxable, those will be defined as income in the definition of income. And what is the point of learning it now? There is no meaning of it, because we don't know any heads of income. We cannot understand such definition of income. That is why we ignore the definition of income now. It is not required. That itself runs into 2-3 pages if you see the essay material, and I suggest you not to go through that. You can ignore that definition of income in this first chapter. That is not going to help you. Rather, it will cause confusion to you. It will add complication to your brain. So ignore that definition of income. Rather, focus on the concept of income, which is summarized in this particular image which was sent to you as features of income. So what are the features of income? What is income? These are all the points to be noted and always to be kept in mind. These are not once again definition. These are concepts. Income. Income includes negative income. So whenever we say income, we should not have a wrong notion that it should be plus. Income could be plus also, minus also. Though generally the word income is used in a sense that it is indicating a plus, that is not the sense in which the Income Tax Act takes the word income as. Income includes negative income. So profit or loss, both are called as what? Income only, as far as Income Tax Act is concerned. And we should not distinguish them as far as the treatment is concerned. Where the distinction will be? Calculation, yes, there will be. There is a big difference between plus and minus. Calculation, there will be difference. Treatment, no difference. If there is any income, if it is positive or negative, we don't care. It is definitely an income. So income includes negative income, which is loss. Second point, should the income be received in cash only? Is there any such rule? Answer is no. Income may be in cash or may be in kind also. Means income received in kind should be valued at market price in the absence of specific direction regarding the valuation in the act. So if somebody receives any benefit from other person, he is not receiving any cash or money. He is receiving some benefit from other person which is in kind. That is also possible to be considered as income. But since it is not in monetary terms, we have to convert that into monetary terms by adopting the provisions of the act wherever the act is giving us such guidelines. If the act is not giving us guidelines, we have to value that at market price, at market value of whatever the SSC has received in kind. So main point, essence, once again, the concept to be noted here is income need not be earned in monetary terms. Income need not be earned in cash only. Not necessary that income is money. No, not necessary. It could be earned in kind also. Still we can call it as income. However, we have to convert that into monetary terms by taking appropriate valuation methodologies. Next, source of income. Should there be a permanent source of income? Like a business should be there, then only it is income. Or a salaried employee is there and he has a permanent job, then only it is income. Is there anything like that? Answer is no. The source of income could be permanent also, or it could be temporary also, not necessarily. So even if, for example, somebody works as a contract laborer or a contract worker, not having any permanent job, the income earned by that person, is it income or not? Definitely it is income. But I am just stopping here. Some of you are assuming he has to pay tax. Did I tell that? No. Having income does not mean somebody has to pay tax. So when we are talking about income, we are looking at income, not tax. Tax is different. When we are talking about person, we are talking about only person, not SSC. So there are various stages. First there should be a person, of course there will be. Then he should be an SSC, possibly, and he should have income. We are talking about that. Then that income should be taxable, next level. Then there has to be tax that is calculated on that taxable income. But what our brain does, directly jumps to the last step without understanding the earlier steps. So what we should do with our brain, we should hold it in the step where we are, rather than jumping to next assumptions, imaginations. No, we are not talking about anybody paying tax here. That is not what we know from income. We are talking about what is income. If it is income, then the next level comes whether that is taxable or not. Okay, if it is taxable, then the next level comes whether there is a tax liability for such SSC or not. All of them we are not talking about. We are only talking about whether income has to be recognized only if it is earned from a permanent source. Answer is not necessary. Should income be recognized only if it is received in monetary terms? Answer is no, not necessary. Even income can be received in kind. Even income could be negative. Even income could be received from a temporary source. Even then, it can still be called as income. Another question. Whether income should be a periodic receipt or can it be a lump sum receipt also? Again, the answer is both. There is no difference whether income is received in installments or in lump sum. Installment means recurring. For example, some employee receiving salary every month. That is a recurring receipt. That is also income. Or sometimes income can be received as lump sum. For example, somebody sells a property that falls under the head of capital gains. It is not going to happen daily. Daily somebody is not going to sell the property. But still, though it is not a recurring receipt, though it is a lump sum receipt, still it becomes income. So both shall be liable to tax. Both shall be basically taxable. Both are having taxability. So the point is, no need that income has to be earned from a recurring source. Not necessarily. Then the next point we already know, that is double taxation, where we observed already in couple of instances this logic has been applied. What is double taxation here? We are not talking about double taxation of same income in one country and another country. That is all coming under international taxation, which will be part of final syllabus. We are not talking about that double taxation. We are talking about double taxation of same income 2 times, 3 times like that. So like examples already what we have taken. HUF, earned income, paid tax. Share of profit from the HUF received by the member, should it be taxed once again? Answer is no. Why? Because if it is taxed, it amounts to double taxation, which is prohibited, which is not correct, which is not fair. So as far as possible, the same income cannot be taxed twice. Not possible. Should not be taxed twice. Same logic applies to partnership also. If partnership firm earns income and pays tax, then the share of profit received by the partner from the partnership firm shall not be taxed once again. That is the reason both of these things, share of profit received by a member of a HUF from the HUF, share of profit received by a partner from the partnership firm, both are exempt from tax because to avoid double taxation of same income. That is another principal concept of income, we can say. So income could be negative also, income could be in cash also or kind also, income could be received from a temporary source also, permanent source also, income could be earned by way of a recurring source also or a lump sum receipt also. These are all various concepts. And the same income ideally cannot be taxed twice. So that is another point to be noted. The next point we will discuss later. It requires a little bit more explanation. What is a mutuality concept? Mutual activity, what does it mean? That we will discuss in the next session. We will continue with other points. What about disputed income? For example, if there is a particular property which is disputed. How do we know it is disputed? Because the title of the property is under litigation. There is a court case going on in relation to that property, and whatever the rent that is being collected from that property is, let us say, enjoyed by one person. There are two people who are claiming to be owners of the property, but one of them is enjoying the rent from that property, the other is not. So should the income tax wait till the property dispute is settled? And we know in India, judicial system is relatively slower and it may take longer time to settle that dispute. So we don't have to wait. So Income Tax Act practically doesn't care about who is the legal owner of any property or any income. So in case where there is a disputed income, who shall be the one who is liable to be paying tax? The one who is the recipient of that income. So the rule there is, disputed income shall be taxed in the hands of the recipient. If he received it, that's it. That is taxable in the hands of recipient. Sir, he is not legal owner. The property is under dispute. Income is under dispute. It all doesn't matter. When there is a disputed income, let that dispute be settled in the court whenever it wants. Income Tax Act has nothing to do with those disputes. It will simply say, whoever is the recipient, Baba, you pay the tax for the income that you have received. Whether you are a legal owner or not, whether you are legally receiving that income or not, that doesn't matter. So Income Tax Act, very particularly speaking, goes substance over form. The legal form is irrelevant for Income Tax Act. Same way, illegal income, the next point, also shall be liable to tax. So sometimes this doubt might come. What about somebody earning the income illegally? Is it also taxable? Answer is yes, it is also taxable. So Income Tax Act does not distinguish between whether an income is legal income or illegal income. If it is legal income, also it is taxed. If it is illegal income, also it is taxed. But however, under which provisions it is taxed, how much tax rate is applicable, already these things are running in your brain. That is what we should stop. That is not what we are talking about now. How much tax illegal income people should pay, that is a different discussion. That is a tax rate related discussion. We are not talking about that. We are talking about, is it taxable? Answer is simple, yes. It is also taxable. Illegal income is also considered as income. That is taxability of illegal income, taxability of disputed income also in the hands of recipient. Now there are some cases where the incomes are not taxable. For example, reimbursements, the point above. Reimbursement of expenses cannot be treated as income. So a lot of times it so happens in some organizations, the employees spend some money on behalf of the company, and after that the company will reimburse this employee the same money what the employee has already spent. So can we say that money that employee is receiving is an income for him? The answer is no. Even once we join articles in the near future, let us say your travel expenditure is reimbursed by your principal. You first incur that. How you incurred that is a different story. Maybe it is by a cab or a metro or something else. But your travel expenditure is reimbursed by your boss. Can we say that reimbursement as your income? Is it logically correct? Absolutely no. Because it is the expenditure that you incurred which you are getting reimbursement of. That is why it cannot be called as income. Of course, main point here is that expenditure should be incurred by you for official purposes. Imagine you have gone to a movie or you did a party, private party. That expenditure is reimbursed by the company. That will be income. That is not excluded here. We are not talking about personal expenditure. What type of expenditure here? That is the expenditure related to the business, related to the official expenditure. So if any official expenditure is reimbursed, if any business related expenditure is reimbursed, then such reimbursement of expenses cannot be called as income. Because the recipient first has spent that, now he is only just getting reimbursed. Is there any benefit for him? Effectively, if you look at, initially he had a negative because he spent that, he went into minus. Now somebody is reimbursing him. So 1 minus 1 plus. What he got? 0. Where there is income? There is no income. That is why there is no income in case of reimbursement of expenses. It cannot be treated as income. Condition once again is such expenditure, whichever is reimbursed, should be not a personal expenditure. Then only this exception is applicable. If it is a personal expenditure, we will see in the chapter of salaries or PGBP how that will be treated. But conceptually, just reimbursement of expenses cannot be treated as income. Some other examples like pin money. Pin money is nothing but the pocket money given by a husband to his wife. That is also not taxable. So husband giving some money to the wife, that should not be taxable. Same way, your parents give you pocket money. Is that income for you? Can that be treated as income for you and can tax be asked from you? Amount I am not talking. Even if it is the greatest possible amount also, even if it is in lakhs and crores also, doesn't matter. It is not taxable because that is not income for you. It is somebody's income which is just given to you. Who actually originally earned is the parents. Then they would have already paid the tax. They were liable to pay the tax. And after paying the tax, whatever the money remaining, that only they are giving you as pocket money to the kids or pin money to the wife. In either case, that is not taxable. So simply pin money or pocket money are not taxable in the hands of recipients. Then another situation, this is also a case study earlier happened, embezzlement. Embezzlement means theft. Somebody has stolen the money, means he has embezzled the money. Lot of words are used, embezzlement, defalcation, theft, all these things are used. So cashier defalcated some of the cash in the cash till. Like that the question will be there. Somebody has embezzled money. Somebody has stolen the money. All of them are ultimately telling us the same thing, more or less the same thing. There may be technical differences between theft, dacoity and all that. We don't need to go into that. That is not our business. Simple point is somebody has stolen something and the money whatever he has earned is by stealing from others. Is that also income for the person who has done that stealing exercise? Answer is yes. Even the money embezzled shall be treated as income in the hands of the embezzler. We can apply the same logic which was treated earlier. Illegal income. Embezzlement income is also an illegal income. Since that is illegal, even though the person who has embezzled the income has earned it through illegal means of stealing from somebody, even then it is taxable. So there is no exception. Somebody cannot say it is not a legal income, so I will not pay tax. I just stole it from somebody. It is somebody's income, not my income. No. You stole it, so it is your income. So embezzler also will be liable to pay tax if his income exceeds the limits. However, there is no distinction as far as Income Tax Act whether such income is really earned or stolen from somebody. That is the essence we can take from this. So legality of the earning does not matter as far as Income Tax Act is concerned. That is another point. Periodicity does not matter. Plus or minus does not matter. Temporary, permanent does not matter. Legality does not matter. Irrespective of all this, incomes are taxable. Legally, somebody is the earner of the income or is it a disputed income, does not matter. Irrespective of all this, incomes will be taxable in the hands of the SSCs, of course in accordance with the other provisions of the Income Tax Act. And some other points like contingent income is also to be just understood as the name indicates. Can future income be taxed now? Can income which might be earned in future, can it be taxed now? Answer is no, impossible. So any income which is not certain or which is contingent shall not be taxable. So income should be real but not fictional. Income should not be contingent. Income should not be something which is on the basis of some expectation in relation to the future. That is not what is income. Income is something which is earned already in the past. So future incomes cannot be taxed, contingent incomes cannot be taxed, uncertain incomes cannot be taxed, and incomes which are fictional cannot be taxed. All of them are coming under the same point. So contingent incomes are not taxable. These are some of the aspects related to the income. I can call them as concepts of income. There are two more important concepts which we'll discuss in the next class. One of them is the concept of mutuality. Second one is the concept of tax-free income. And of course, there is a subtle difference once again between diversion of income and application of income. That aspect also we will discuss in the next class. But as far as this particular session is concerned, we have discussed about some of the other definitions, and all the definitions we have earlier discussed and understood. In addition to that, very importantly, the concept of income has been discussed in today's session. So I hope you are all following the words very carefully, and I suggest that you make a note of these words. Technical words and terminology has to be noted. In future, we cannot say what is this word, I don't know. Such type of situation should not come. Everybody should be thorough with these words. Whenever these are used in future, we should be able to relate to them. The purpose of going through this terminology in such a detailed manner itself is that if we spend sufficient time now in creating the base of terminology and concepts, then understanding the real provisions when they come in the Income Tax Act will become easier. So use this as an opportunity. You can listen to these audio lectures repeatedly also if it is required, and you can take notes, that is very important, as a summary of whatever is being discussed in these audio lectures. And we will continue this series with some more concepts of income in the next class, particularly related to what is the concept of mutuality, what is the difference between diversion of income and application of income, and not only that, the incomes which are tax-free, is there anything like that or not? We will bust such myth of tax-free income in the next class. With that, and of course the judiciary and how the appellate jurisdiction is there, that diagram has already been shared. With that, we can almost conclude in the next class about the concepts and definitions in relation to the Income Tax Act, and then we can move on to the computational aspects related to rates of tax and etc. Till then, take care, stay home, stay safe. Bye. Thank you.